You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, let's get to it. Talk some futures options. My name is Mark Longo from the optionsinsider.com, and we are up against this. We got to get going. Joining me on the old program today, my cohorts. It's like old times here, Nick. Just me and you on the show today. Mr. Nick Howard, the founder of Bantix Technologies, creator of a little platform we like to use called QuickStrike. Mr. Nick, welcome to the show, sir.
Hey, what's up? Good to be back. Just you and me solo. It's always nice.
It's like old times. Our friend Sean, he does exist. I can confirm he does exist. I saw him last week at FIA, but he is, I think it's his father's birthday, and he's celebrating 90th birthday, I think, celebrating it somewhere, I think in Arizona. So hats off to him. They're having fun over there. So me and you, Mr. Nick, holding down the hot seats here this week. Can you handle it, sir?
Yeah, I think we got it. I think we got it.
Well, speaking of things we got to get into the equities, sir. It's just crazy. I think, what's the technical term, Nick? Is it holy crap? Is that the technical term?
Yeah, a little bit. I mean, I'm just looking at just the whipsaw that we've seen. People had to do well, or I've heard of people doing pretty well on this little back and forth, but I'm sure it had to cause pain for a lot of people as well. But holy crap probably suits it fairly accurately.
Yeah, I'm looking here. By the way, listeners, you guys can, of course, follow along. CMEgroup.com/TWIFO, TWIFO. That way you can see the reports Nick and I are looking at today. If you're logged into QuickStrike, you can just click on the quick reports and go to the TWIFO reports. You'll see these for yourself. It breaks it all down for you. Or if you're not using QuickStrike, what are you doing? Head on over to quickstrike.net and sign up for yourself so you could see exactly what we're seeing here. And if you did such a thing, and if you pulled up the eMini S&P, you'd see it's been quite a week here. The S&Ps right now, eMini coming into showtime was off net on the week about 2%, 2.14%, or about 55 handles. Vol, of course, very rich. Today's story a little bit different. We're seeing a rally in the broad equities today, but this show, of course, is this weekend, so it includes the entire week, and the rest of the week hasn't been so good for the bulls, I should say, out there. Interestingly enough, Nick, we always talk skew. One of the things I really like to use about the QuickStrike, of course, is the quick skew. And looking at it here, it's kind of interesting here. If you're looking at, let's just look at this crazy contract that's going away today. Granted, that's a crazy contract because it is going away today, but we can look at all the others throughout the early portion of the E-mini curve. You see a similar story here, Mr. Nick. You know, last week, puts very rich, puts very bid, obviously. People were concerned, not too surprising given what we saw in the market. This week, we've had a bit of a sell-off, and now we're seeing puts, shall we say, still bid, but not quite as juicy as they were last week. Calls, same deal, getting a little bit of life, Mr. Nick, coming to life here on the little quick skew. Is that what you're seeing here as well, Mr. Nick?
Well, yeah, I mean, we've been paying attention to this now for the last couple of weeks, and again, we have to go out further on the term structure to see things be a little bit more normal of what we used to. But for the short-dated stuff, the puts are definitely getting a little bit softer in comparison to where they were last week. Now it's going to partly it's going to be decay and moving inside those 30 days, but we can even look at the 22-day option, which was a 30-day at the end of last week, and that's the puts are about 5% cheaper, not vol percent, but 5% less expensive to the at the money than they were last week, and the calls about the same in the other direction, so more expensive than they were. So yeah, so you get the big moves, but then there's it kind of like presses things down a little bit once it kind of comes back in line.
Speaking of compressing, the RVX to VIX spread is actually doing the opposite. RVX, of course, the volatility of the Russell 2000 hovering at about a 26.25, a VIX cash right around 22.5, so close to 4 points out there, which is a 3.75. That's about as wide as we've seen it in quite some time, which again goes to show kind of that volatility differential we're seeing out there in small cap land versus large cap, with Russell small cap always more volatile, usually and just structurally more volatile. And these days, that sell-off in the vol coming in today, just exacerbating things over there. Speaking of Russell, since our buddy Sean couldn't be here today, we're talking, they have some interesting data coming out here about, if you're wondering, ways to utilize these things, obviously you know what the broad index is doing, but that's not all you can do, obviously, with the options. You can also override them, you can hedge them, do a bunch of stuff. Luckily for you, Russell tracks all that stuff, and they benchmark it, and they have put out some numbers earlier this week, which are kind of interesting. Obviously, if you update these numbers to today, given the last couple of weeks, they'll be a little bit different. This data is from October 12th, the close on October 12th, and Russell's been tracking a bunch of different things, including a buy right index on the Russell 2000, a 30 delta buy right index, a conditional buy right index and a zero cost put spread collar index. And if you look at all those, you can see if you just naked held the Russell 2000 through that point there, you were up not quite 1%, about 0.75%. If you did the buy right, which is just a straight at the money buy right every month there, you got about 1.5%. So you pretty much effectively doubled your returns over there, getting that little bit of extra income leg going off over there. A little bit of extra vol didn't hurt that either. Conditional buy right, if you're wondering what that is, because I did as well. That is a long the Russell 2000. And then, so that's unlike the other one, which kind of the at the money buy right is just effectively simulates that against a basket of stocks. This actually owns the underlying Russell 2000, then writes the at the money. So it's a little bit different structurally. This one is up about 1.7%, so a little bit more than the at the money buy right, which you would expect. The 30 delta buy right, so giving yourself a little bit of capital appreciation to the upside, give yourself 30 deltas worth of room to run. So selling an out of the money call, obviously, that one's up almost 3.5%, about 3.4%, doing a little bit better, obviously, capturing that upside. Again, these last couple of weeks may change that a little bit, but still. And the winner of the day, which is kind of interesting, Mr. Nick, is the zero cost put spread collar on the Russell 2000. That's up nearly 4.5%. That one buys a 2.5 to 5% out of the money put spread and then finances it with an out of the money call. So again, you got to do a little bit of jigger in there to find a put spread that lines up with a call. That's why there's a range on how far out of the money the put is. It's not always going to be easy to do that, but they do that on that thing. And so far, Mr. Nick, does that surprise you that the collar is kind of winning the roost right now, or is that kind of what you expected?
No, it's. I think what you said makes a lot of sense. I'm just trying to, as you were talking, I was trying to look at just where this vol increase is coming from, and it's. And I'll tweet this out because I think it's pretty interesting. I'm looking at the December contract in the eMini, and the reality is that the at the money we're down like 100 points from the beginning of from the end of last week, right? And it just like the at the money slid up the curve, right? So we really didn't see a big shift in the vol curve. So we didn't see a great big change in the structure of the vol curve. We just sort of saw the volatility slide up along the curve. But what we did see is a change in the skew. Like we mentioned, we saw the calls get a little bit firmer here, and we also saw the way out puts get a little bit bid as well. So maybe not so much in that 50 down to 15 or 20. 25 delta range, but less than 25. All the calls from the at the money seem to got more expensive, and the 25 is down in the puts. So, I think that's where a lot of our, skew talk is coming from. In that we're really not getting this increase in at the money volatility may not necessarily be an increase in at the money volatility. It's just the market sliding along that volatility curve and saying if we go higher, if we go lower, vol is going to be higher. If we go up, vol is going to be lower, but in this case, it looks like we break and we get some call buyers out there that are giving a little bit of lift to the upside. So I'm going to push this one out and let people take a look at that, because I think that it says a lot in terms of what volatility is actually doing.
There you go. Check it out at QuickStrike1 on Twitter. We will, of course, retweet it as well. We got a little bit of a truncated show to the listeners, so we got to keep on rolling. No time to break down the top positions in each there. But that's kind of a story we've been talking about for a while now in the equities, and you might expect, and certainly just straight up outside of context, looks like a vol explosion. You get into a little bit more, you realize we kind of have been kind of staying pretty glued to that skew curve for quite some time now. Haven't really exploded off it the way you might think, given all the other things going on out there and that. So that in and of itself is an indicator. Speaking of indicators out here, crude is an indicator for the broad economy, and crude has been taken on the chin over this past week. This later session's not so much, up a little bit, hovering right around the 67 handle. Got as low, I think it's down into the 65 range earlier this week. Net still off on the week, nearly 3%, about 2.75% out here. Actually, the low was 66.43 back earlier this week. So a lot of that coming on the heels of, again, our friends from the EIA, crude inventories rising, of course, but also we saw some inventories of gas and distillates falling more than expected. So kind of a bit of a mixed metaphor coming out of the EIA this week, and all of that, of course, but it was enough still to lean on crude, at least over the course of the earlier part of this week here. Also, really quick, I want to note our buddy Blue's been on the show many times. Just put out an interesting report. You can check it out over there at cmegroup.com. 6 major themes to watch over the next few years. This is long-term in crude. He mentioned a couple of things. Economists love elasticity. We like to talk more about price volatility. They talk about elasticity, kind of two sides of the same coin. He mentions here shale oil production going to be a lot more price elastic than Saudi and Russian crude. So obviously a lot more price volatility. That's, of course, a lot of reasons here for the domestic production. So he expects domestic, especially the shale oil stuff, to drop a lot further when the crude drops, rally a lot harder when crude rallies. So expect a little bit more volatility out of the shale oil side of the business, at least in the near term. Also, obviously, the big driver for everything going forward is going to be this WTI story. And, of course, our infrastructure as a result, because we're kind of at our max now, how much we can export. So how we increase that infrastructure is going to depend how much WTI can get out there to the rest of the world. Is going to impact the WTI Brent spread. Obviously, the other side of that, of course, is the shipping costs, which are growing increasingly important as we're seeing all these limitations on how many tankers can ship, how many pipelines we have. We're kind of coming up against the limits of our infrastructure, and how we improve that is another long-term story in crude. Also, electric cars. He's watching electric car space. When that takes off, that's going to probably have that's a longer-term play, 2020 and beyond, at least for that. But he thinks that's going to hit gas demand. He's probably right on that one, but against a longer-term play. And a longer-term also, we're seeing nat gas supplanting coal as the big driver for electricity production around the world from an energy demand perspective. So that, of course, long-term should lead to a bid in nat gas prices. So those are Blue's things to watch there long-term. Check out that video over there, CME Group. Well, we'll chat with them again soon on the show, I'm sure, and we'll put it to them then. Mr. Nick, anything catching your eye this week out here in crude oil land, sir?
What do we got in crude? No, we're a little bit softer, and I think that a lot of attention was drawn away based on the equity market, even with all the news that you did mention out there. It looks like we moved toward a little bit more balance. Well, not necessarily. I mean, there's really not anything too exciting here. The volatility, not much has happened. We kind of we traded down, but I think that was sort of the path we were following as we ended the week last week, and then the nothing really super exciting in terms of the quick skew or the change in what the vol curve looks like. So, like we talk about when we get to this where we kind of butt up against the high end of a range, and then we start to get pushed down and we get depressed again in terms of really not being able to break out of that. I don't think to say there's not anything interesting going on there. I'm sure people did plenty of trading this week based on what the OI looks like, but from a volatility and anything super catching your eye or change in sentiment type of thing, I don't see anything that's really all that nuts.
Speaking of nuts, we'll hit really quickly, and I want to make sure we have to do a short and show, so make sure we get some time for some listener questions as well. But I know you're nuts about gold, Mr. Nick, and gold has caught a bid recently over the past couple of weeks after this. As we've seen a lot of tumult in the broad equity market. Today, kind of quiet out there, and kind of net on the week, actually settling in here, almost a little bit unched on the week. Still at that 1230 level out here in WTI. Got as high as 1236, almost 1237 earlier this week. That's the highest for the active contract, at least since July. So we got to go back a few months to see that kind of level of price out here in gold. So it's been a little while out here in terms of what's going on here in gold land. Vol up a little bit kind of across the board here, as you kind of might expect, ticking up a little bit, getting up against some of those calls that were a little bit rich. Let's see, coming in there, the puts are more bid. And let's see, the puts are cheaper and the calls are more bid here. So getting a little bit of bid here to the skew for the call side, at least, Mr. Nick, looking here across the quick skew, at least in the near portion of the curve. You get a little bit farther out, it's kind of a little bit of a same old story. But in the near portion of the curve, Mr. Nick, it seems like people want themselves some calls in gold. Anything catching your eye in the shiny stuff this week, sir?
No, you certainly are. You sound like the FedEx guy today.
I'm cranking. I got to get you out of here, sir. I'm cranking.
Yeah, no. Don't worry. I gotta walk down the street, but I still got to be on time for for the conferences. But no, I mean, outside of the fact that we continue for the we don't see too much of an increase this week, but the fact that we sustained the rally that we had last week and we're sticking up there and we don't see vol coming off all that much. I mean, still it makes me feel like there's still some anticipation of movement in this market now. Again, like we always talk about with this, how gold is in this kind of range rangy trade. So I think the next thing here is if we continue to move to push a little bit higher, or we'll have to check our range and see exactly where we are. But it just feels like now we always talk about long puts and long futures. But as we get towards this higher end of this range, and if we feel like this rally might not sustain itself, then potentially we start looking at our other trade, our high end of our range trade, where we're long calls and short futures to take advantage of that move back down. So yeah, other than that, like you said, not much really showing, except in that 30-day option. We did that these contract is the 30-day option, so we are seeing a little bit of a bid in the calls and offer in the puts. So that is something. So short term, anyway, it's saying that people think that or at least the interpretation is that we might still see a little bit of a press up before we see that move back down into the middle of the range.
Speaking of breaking things down, Nick and I are going to do that right now. Give you guys a chance to shine here on the show with a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. We've been promising you a lot of questions. Q&A show coming up. We're going to get to as many as we can here in the remainder of the show. Try to keep you guys happy. Always a challenge. You all want so many products on the show. So much time, listeners. All right, we start up. Here's some love for you, Nick, to kick things off. This comes from DCVic. He says, hey, Nick, good call on puts and gold futures. Thanks. So there you go. A little bit of love for your tied puts, sir. Getting some love. Look at you.
Yeah, very good, very good. I mean, I wish I would have tied some of myself, but I'm not doing that because I'm too chicken in the futures and futures options right now. But yeah, that's why I mentioned the same thing about the trading the range and the gold on the upside. So it'll be something we have to watch to see how much higher we push, or if we start to butt up against that. The high end of the range, and then my sentiment, like I said earlier, is the same. You start looking for something that's going to push you back down into the lower end of the range. But thanks for that shout out. I appreciate it. So somebody's paying attention.
There you go, Mr. Nick. He loves your love. Send the man some love. He likes love. All right, here, Angel. He or she saying this kind of goes on what we were talking about earlier on the show last couple of weeks. He says, looks like Bitcoin is the digital flight to quality. After all, no sell-off with equities. This came in obviously recently, given the recent market turmoil. Let's pull it up, see if they're right. Yeah, it's kind of been interesting, Nick. The Bitcoin, I'm looking at the Bitcoin future here at CME. It's been kind of glued at that 6,400 level for a while. It's off about 25 handles right now, but it's been vacillating around that 6,400 level for some time, which is interesting given, how much volatility we've seen in the broad equity markets. I think it was about 3 weeks back when we first saw the first shocks to the system in the equity world. And we saw Bitcoin sell off as well. And everyone said, oh, well, there goes our digital flight to quality. This ain't no gold. But I think that's probably people maybe putting the cart before the horse a little bit. No one really said, outside of the true believers, no one said Bitcoin was gold is obviously that kind of mostly negatively correlated. That's what people go to it for. Bitcoin, everything you look at here, it seems like it's kind of uncorrelated. In fact, I was at an event yesterday where they were touting the correlation is kind of anemic. And we think we needed a few more shocks, at least to me, to really prove that. And we haven't seen that so far the last few sessions. We haven't seen commensurate sell-offs in crypto, which is we like to usually when these kind of things happen, when everything starts selling off, all of a sudden correlation goes to 1 across the board, even for a lot of these quote-unquote non-correlated assets. But we haven't seen that in Bitcoin. So maybe that narrative is false, Nick. Maybe it's not the flight to quality asset. It's more just a non-correlated asset, and that's why you want it.
Yeah, I wouldn't say it's a flight to quality at all. I mean, the flight to quality would be like you said. We saw gold rally and hold firm when things got a little bit goofy, and then we also saw the bonds come back as another form of quite the flight to quality. I think the Bitcoin is just something that there is a lot of trade. All right, there's a lot of two-sided trade going on. And one interesting thing, I think it was in a newsletter this morning where yesterday the CBOE traded 1,826 Bitcoin futures and the CME traded 3,682 Bitcoin futures. So now we all know that the CBOE has that one coin future and the CME has that 5 coin future. So obviously CME dwarfed the CBOE in terms of notional value there, but just the fact that that you get in those number of contracts, those are pretty significant contracts. This is like we said, once CME with the 5 coins, that's definitely more institutional based stuff. The CBOE has got to be smaller people that are just doing one coin. Eventually, when CME does do something, and I've been saying it from the very beginning, when they make a smaller version of the coin or something like that, CFE, the CFE contract over at the CBOE, it's not going to see much volume anymore. But yeah, flight to quality, not buying it. I think there's just a lot of trade, and we've been watching this for a long time now, right? So the moment the futures came out is when we started to see the Bitcoin trade in ranges, right? I mean, that's really what it came down to. So, so I don't know if it's a flight to quality. I think it's just a flight to people, back and forth, two-sided markets more than anything else.
Yeah, definitely not a flight to quality. Maybe a flight to, or a non-flight to non-correlation. Put it how you will. But interesting stuff. Obviously, some people out there who track Bitcoin all day long will be happy to send me the exact correlation numbers, I'm sure, here. But it has been kind of interesting to watch. I think that's more the narrative is if you want it, you don't look at it as a gold that's not going to have this negative correlation. It's going to have more of kind of doing its own thing, which is if you want it in your portfolio, and there are reasons to want that, then perhaps maybe Bitcoin is a choice for you, or maybe you go some other uncorrelated assets. But they are growing increasingly hard to find when we have these repeated systemic shocks. All right, here. H4G, Mr. Nick, they got a more fundamental question. They want to know, is there a certain time of day when the futures options price begins to reflect the change from theta? Or is it just very gradual all day long? This is one of those simple questions that is also extremely complicated. When the theta is going to kick in is a point of contention. It changes by the day. It changes by the product. It changes depending on the paper flow. It changes depending on the skew. It changes kind of depending on all of the above, the volatility levels. This is something we used to, when I used to be, trading on the floor of the CBOE, trading, a lot of equity and index options. This was a constant thing of debate. When are they going to take the weekend out this time? Oh, it's going to come out on this week. It's coming out on Wednesday. They're really crazy. They're really squeezing that sponge early. Oh, it's not coming out till Friday because things are happening. There's a non-farms or other things. So it's a very, very fluid thing, and it's not even the same day to day. And Nick, this is the kind of thing I think that confuses a lot of newcomers, whether it's futures options, equity options, whatever the hell you're trading. They see this number in their platform. Oh, your theta is whatever, 2. That means I'm going to have that decay every day like clockwork, and it's going to kick in, be all throughout the day, and that's not at all how it plays out. You got any thoughts here for H4G, who's a little bit confused, and understandably so, Nick, about when does the theta kick in? Maybe you need that on a new tool on QuickStrike, the theta kick-in-o-meter. I like that.
Well, that is a pretty good question. I think that from my experience anywhere, or at least watching it, things kind of hold firm throughout, and then it just sort of one or two things happen. I would even say that at times, if a market's busy, the theta may not necessarily even come out during the week. What you just see is, at least in the Eurodollars, what we always saw, the market could start out 4.5, and then at the end of the week it was 4.5. So there's obviously theta in those contracts. But what would happen is the volatility would just get firm and just keep the prices at the demand level. So there's something that you could look at, which is theta vega, we call it, and I think we have that on the pricing sheets where you could see how much does vol have to increase to offset the theta that exists in each of those contracts on a per day basis. So I would tend to think that, depending on how busy the market is, I've been watching the equity options quite a bit now lately. I don't necessarily see the theta come out on a daily basis. I see it more come out when you go from like a Friday to a Monday or over across a holiday. So I would say, is there any specific time? Not necessarily. I think it might be a function of how much action there is in that market. And then really comes down to, I think when you start to get past that one day, you might see multiple days come out much more quickly than you do see single days come out more than anything else.
Yeah, you're right. Equities tend to cluster around that weekend. It's the weekend effect. When it's going to come out. That's a constant point of debate every week. And you got, if vol comes in, you don't see the decay. It's very confusing for people. We could spend a whole episode on this one question, as simple as it is, because it's very nuanced. But we got to keep rolling. Mr. Nick, you got time for one more? You want to dance with one more here?
No, I do.
All right. So pick which one floats your boat. I'll let you pick our next one here.
Okay, gotta get. Oh, my browser's closed. Hold on, let me look. Where is it? Here it is. Let me go down. You catching me off guard.
Throw you curveball. That's what I do here.
Neutral these on their platform. There's a certain time of day. Let's see. I'm short of these 90 put, which I sold for CL. Well, my option expires out of the money. Do I need to do anything? Want to answer JBL?
Sure, let's do Mr. JBL. He's got another fundamental kind of question. We get all kinds here. I love it. I love the breadth of the questions here. They range all over the place. Here's a more fundamental one again, coming from JBL this time. He says, I'm short a DC 90 put, which I sold for around 85 cents in crude oil there. What will happen if the option expires out of the money? Do I need to do anything, or will everything just take care of itself? Well, first off, JBL or anyone else out there, if you're out there, you're hitting bids on options, you're selling options, this is not a criticism. This is just probably an advice for future. You probably want to investigate these things before you put the trade on, so you know exactly how these fundamental underlying mechanics of the contract actually work. So you're not confused when expiration comes. That's the last thing you want. You don't want to be short gamma, short a contract, and not be sure how this thing works. That's an added level of stress you just don't need in your life. So yeah, just as a good life lesson when you're trading options, maybe do some of that research ahead of time. But now that we're here, we can help you with this one. And yeah, the short answer to the question here: if it's out of the money when it expires, then you're pretty much good. You don't have to do anything. I know Nick on the OCC folks changed their auto exercise threshold to a penny. Not that long ago, about 4 or 5 years ago. So that kind of took a lot of the guesswork out of the equity index option side. Do you know what it is over on CME side? What is their automatic exercise? Is it a penny as well?
Oh, that you're asking the wrong guy. Don't know that for sure. But I do want to just say one thing. That JBL short a DC 90 put in CL.
Yeah, you're right. I didn't notice the strike.
So
that thing could be many dollars in his face. I don't know.
That could be very bad. So you better check, first of all, if it's CL or some other, or not, or the other CME Brent contract. But I'm going to assume there was a typo. Right now. I'm going to assume there was a typo. Hopefully, for his sake, there was a typo there somewhere. I hope it's a 90 put. I'm a 90 call.
Yeah.
Because if it's a DC 90 put, then you have about a month and a half to come up with that 30, 20, what is it, $23 against you at this point right now.
Yeah. So. He's getting calls right now saying, hey, dude. So yeah, hopefully for your sake, JBL, that was a call or some other sort of typo.
But I have one other thing. So all he really wants to do, if you sell something that's out of the money and it expires, the one thing you can do is a little dance because you made some money, right? So you can do a little dance to say, hey, I'm happy I made some money.
There you go. The do a little dance here, and Mr. Nick, I think that you got one more. Or you want to wrap it up? It's up to you.
I got one more.
You got one more. Look at you. All right, here we go. We'll do one more here. Let's go. We've been doing a lot of fundamental ones. Let's see if we can do a crazy one to wrap up. Blah blah blah. They got a lot of questions that get into the fundamentals here lately. Let's go. This is kind of related to what we were talking about earlier. Let's go to this last one here from wrap it up here with a question from Matteo. Another question on theta. He says, I'm selling monthly put options on the eMini. So I'm short options and I'm short premium, but I'm collecting time decay. Does that mean I'm actually long theta? Help, I'm confused. Oh, also an update on Bitcoin options, please. Thank you so much. The latter is easy. There's none. There aren't any. There won't be any for some time, so don't hold your breath on the Bitcoin. I've been bugging everybody. I've been bugging CME. I've been bugging SIBO. There's been a bunch of other venues that have been coming through here, new crypto venues on the offing coming soon. I've been bugging all of them. Short answer, not going to have any Bitcoin options, at least anytime, unless you want to go, OTC with some of the desks that will oblige you there, but that's going to cost you. And then the former, Mr. Nick, you want to walk him through what he's confused about? It is confusing as well. You're selling options, so you're collecting decay. That kind of flipping the sign always confuses people, doesn't it?
Yeah. I mean, I actually just got a question from somebody else today about this. So if you are, I always think of it, the best examples, I think of it from being long, right? So if you're long options, your theta is negative, meaning you're going to, that number is, you're going to lose money, right? So it's a negative theta. So anytime you see a negative, that means there's a loss on your side. But since you're short, right, you turn that negative into a positive. So, right, so you're short options, you're going to, presumably as time goes by, that premium will get lower and lower, and you are collecting that theta, you're collecting that premium, and that P premium is not realized until you take the expiration off, but it will be realized in your account as money that gets settled into your account every day when they mark to market.
There it is. There's that music. That means, unfortunately, listeners, we come to the end. Apologize for the truncated show this week, but we'll be back at you next week and many more weeks with many more long, full-length shows with guests and all sorts of fun stuff. So stay tuned for that. But, of course, before we go, let's go back around the horn. Let's start with you, Mr. Nick. You guys are always cranking out cool stuff in the land of Quick Strike. What do you got cooking for us this week, sir?
Well, this is like the old time shows when we were only running a half hour, 35, 40 minutes, right? So now we're back in the early days. Just stay tuned. Some new tools coming out around economic events and expiration matchup and event vol calculators, that kind of thing. So just pay attention. Those free tools will be released on the CME Group website. And if you're looking for more info about Quick Strike, just go to Bantix, BANTIX.com, and look around there and shoot us an email and support if you got any questions. But, all new tools coming out real soon.
New tools, check them out over there at quickstrike.net is the place to go, or Bantix, that's BANTIX.com. Sign up for Quick Strike if you haven't done so already. Seriously, what the heck are you waiting for? These are kind of the only game in town in the futures options world. So if you want analytics, you like all this skew talk we're talking, you want to see the vol changes, you want to see, it's not just what we talk on Twifo, it's a bunch of stuff. Bantix.com is the place to go. Kick the tires and light the fires. And of course, our friends over there at FTSE Russell. If you like that data I was sharing with you, you can find that and a lot more. FTSERussell.com, FTSE Russell.com. We're giving a follow on the old Twitters at FTSERussell.com. Sean should be here next week to share a lot more of that data with us as well. And of course, our friends over there in the land of CME. You know where to find them, CMEgroup.com. We'll get some of their folks on. Maybe we'll get Blue and some of his team or some of the other guys on. Maybe we'll get some of the ag guys, rotate some new people on from CME into that CME Group hot seat. So stay tuned for that soon. Stay tuned for us next week. If you got more questions about vol and all that fun stuff, what the heck's going on in the broad equity world of volatility, then join us again tomorrow, noon Central, 1 p.m. Eastern, for Volatility Views. We'll break it all down for you. It should be fun. Otherwise, we'll see you next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.